Um, all right. Now, like, so let me rejoin with my PC.
All right, guys. I think I'm now back. Yeah, we are live, right? Let me check my YouTube and see.
in real life.
Okay. All right. Let's start then. Okay, yeah, we are live. Okay. So
So
today,
should I stop?
today you'll be doing it. You guys have.
Finish.
Okay, let me give Elvis the floor. Elvis, you're welcome. Hello, Elvis.
Yes, sir. Good evening.
Good evening. How are you doing?
Fine, oh. Yourself.
Lovely. I'm great. I'm great. Hope hope you're in a good area.
Yeah, with network issues.
Now, like network, this one, serenity and everything, because you'll be talking.
Oh, okay. Yeah, yeah.
Yeah. So for last week, we would like you to do the back testing for last week. You get it? You guys know the times that I trade 2 p.m. So let's back test what the market was doing from Monday to Friday at 2 p.m. So you can share your screen.
And let me stop sharing mine.
All right, no problem. But have you guys decided on the pair that you'll be trading? Hello? Yeah, I was asking, have any of you decided on the pair that you'll be trading? Joshua, what's your account size?
$10.
How many trades have you executed?
No, it's like I blowed one of my accounts, so
Well, what happened? What did you do?
I entered a trade and I opened many positions.
Why?
Even though the trade played out, but it was in a loss. So when I was in the loss because of the positions, then
But we've been talking
like
about risk management. What made you do that?
oh that
Eh?
was before
Nah, since day one, we've been talking about risk management. And World Trade, were you the one who did the analysis?
No, it's not the one.
So who did you take it from?
It was a friend.
And you went to open that many positions.
I opened like 6.
Yeah, on a $10 account.
Yeah,
Even if you are using 0.01, that's 0.06 in total.
I just did it to maybe learn a lesson. So I've learned my lesson.
Well, I just hope that you don't repeat that again. And
Mm,
for this very bootcamp, the reason why I'm more about live sessions than signing up signals is you guys need to get to a point where you should independently be able to analyze market yourself and pick like your own trades. You get it?
yeah,
That's why for today's session, I want you guys to do the analysis yourself for me to see the progress that you guys are making. Okay, because when it comes to trading, this thing I'll always keep on saying it. The strategy in buying and selling, it's nothing. You get it? You just
yeah,
need to make sure that you are disciplined with your risk management and your emotions to are in check. Otherwise, you can have like a strategy with 99% win rate, but then if your risk management is bad and your psychology too is bad, you are definitely going to blow it all. You get it? So aside
yeah,
all this, and these two things are the stuff that me I cannot help you with. You get it? What I can
yeah,
help you with is what we are doing right now, the strategy, like what to look out for in the market. But when it comes to psychology and discipline, that's one thing that me I cannot save you. You get it? And
yeah,
stuff like that. You need to be disciplined enough to master it early. Otherwise, if you don't master it early, your journey is going to be very long. You get it? You may
yeah,
get to a point where you will feel like even giving up, but then it's no one's problem than yours. You get it? Because me, like, I'm barely in my 2 years. You get it? But then early, like when I started earlier, I just made it a point that what like I will focus on the like let me say the concepts that really affect the profitability of a trader. You get it? And I
yeah,
got to realize that strategy and all this, it doesn't factor to any traders there's one profitability. You get it? So I just decided to what pay attention to risk management and psychology. You get it? When I was able to master these two, exposure came in. I got the exposure. I go to what start managing big accounts and what. And the thing is, this $10, $20 we are trading, it's not going to do anything for us. Like sometimes you can be getting a weekly $5, $10, and like fortunately for you guys, are using HFM. HFM allows up to what's the name $5 withdrawal. You get it. So meaning on a weekly basis, you can be withdrawing like some $5. You can be using them to buy some petty stuff. You get it just to feel like the sweat of your labor. You get it. But then if you really want to make a living out of this, you just need to what make sure that what you are building a track record. And that building of track record, bro, it comes with like a very huge discipline. Like you need to be disciplined. You need to discipline yourself. You need to discipline like your mind. You get it. When you get to that point, that's when the big fans will come in. And if the big fans comes in, that's when you can tell, like you can call your job a quit. You get it. That time you
yeah,
can do whatever you want to do with your time because, bro, imagine you are managing like even this thing what's the name $10,000 accounts. 10% of that is 1,000. You get it, and maybe you have agreed with your investor to be doing something like a 50% this one profit split. 50% of $1,500. Imagine
mhm,
this one, like let me see, withdrawing like $500 every week or let me say every month. That's like 8K CD2. You get it? That's how
yeah,
it works. And with that, there's a lot that you can do without needing a job with that amount of money. You see? Hey, Elvis, is that your setup? What am I seeing? Hello? Elvis. You're muted. Oh.
Hello.
Yeah, I was asking, is that your setup?
Yeah, me, I just view the, how do you call it? The zones that, the, just the zones. That's it. And I even blew that account because
Hey,
when I entered the trade, I couldn't set the stop loss. So it entered into a stop loss and
how?
blew the account.
How much was the account?
I think it was left with $4.
And good blew your account.
Yeah.
Charlie.
Yeah, I even
Oh, thank-
forgot. Uh, Ryan's trade also. I've lost $4, so it's left with $6 rather. It's not
oh,
10.
okay. Yeah,
Yeah.
for that one, Alvin's the one was the one who drew my attention to it. I think you see, one thing about me is whenever trade goes into, I'm not as this one a swing trader. You get it. So
Yeah.
whenever a trade goes into 1:3, I just close it and take my profits. That's my rule. You get it. Irrespective of whoever's this one direction I'm taking. You get it. So I took that trade because yes, Ryan is someone who is very good at what he does. You get it. And I wanted you guys to what also like let me say get a feel of how to let me say how to execute a trade. You get it and see how it goes. Like managing of your emotions all through. Like you get it. All of those stuff. There's something that I could have done with you guys easily, but you see, last week was very difficult. Like I had last week, how many live sessions did we do? It was like two. You get, we did only two live sessions. The rest was me. Me, I don't because I'm a scalper. Like market is fast in everything that I do. Like I'm very quick with my decisions. You get it. So unless we are live like this, then I get to tell you what I'm really doing. That's when what you guys really see the efficiency of it. But then if I'm to be like at the back of my phone just texting you guys, buy good, put your SL here, put your TP, and I cannot do that. You get it. So well, the loss is just part of it. And the thing is, if he was a day trader or a scalper like me, you guys would have lost. Like you would have lost less. You get it. But as a swing trader, sometimes you need to expand your SL a bit. And I think you lost like that's 140 pips. That's like $4, right?
Yes.
Yeah. So that's it. Actually, this girl, what's the name? Mavis Tutu they trade. She also this one got like what's the name? -$8. Yeah. He also this one hits this one a lot on that. But then I had closed my trade earlier because I'm very strict with my rules. Immediately any of my positions move 1:3, I just take out my profits. You get it? And even if my emotions to should come to play and I'm to take my profits early, I make sure that what I'm taking that profits at least 1:2. So meaning if I was risking $2, I must walk away with $4. You get it right. So
Actually, when that trade hit $10, I was about to
you're about to close
book it,
in.
but later on, I heard him send a message that we should still hold on to the trade.
Well, I do understand
But
him.
then,
Like mostly if you're this one, like you see someone like Ryan, his system is solid. There's something he has been trading consistently. You get it. So you can see the sort of confidence that he had in it. You get it. So that's the point that I want to get you guys all. So that even if you are to see your setup in a loss, you still have that confidence to what hold it. You get it. The only time you close a trade is if the trader has what hits your SL. Me personally, the only time I close a trade is either my emotions come to play, then I'll be closing my trade early. You get it? And if I'm to close my trade early, at least I'm not closing 1:1. I'm closing 1:2. You get it? If I'm not able to close 1:2, then it means that what I must wait for my SL to get hit. Hope you understand. Like Friday straight, for instance, we were like I went into profit for a while, then price reversed on me. Right after it hit my SL, it came back into profit. But then I had to accept that what this loss I've already taken it. I just need to let it go. You get it? Because last week, for instance, we were winning back to back Monday, Tuesday, Wednesday, Thursday. All of these were this one, like we were making profit. You get it? Then we had Friday coming to take only $10. You get it? So this was something that really didn't get to me, you see. And that is the sort of confidence I want you guys to have in your setup. Like you've done this setup, you need to have the confidence that okay, at this point, I'm only waiting for either 1:2 take profits or SL. You get it? Just these three. Okay. I think Elvis, this one too. Network too is failing him. So Joshua, let's get
Hello. I got one
yeah,
thing to say.
yeah. So I don't know. Have you been joining? Since when did you stop? Because the other time you were like, it's been a while you joined the sessions.
Yeah, that's the like trading.
The live trading.
Yeah, at that time,
But last week were you here? Last week Sunday were you here?
yeah, I was here.
Okay, okay. All right. So you remember me doing this thing, right? Do you remember?
Uh, Not really.
Okay. All right. Actually, I've sent some slides in the group before. I'm sure you've seen it. So this is a simple strategy that I taught them. You get it? I realized that most of you were finding it difficult to. You are finding it difficult to arrive on a simple strategy. So there's something simple that you can be looking out for in the market anytime, any day, on any time frame. You get it? So this is basic. So if you already know the different ways that the market moves, we have the sideways direction, the uptrend, and the downtrend. You know these three movements, right?
Yeah.
Okay. So this is what we refer to as consolidation. When we have markets moving sideways, this very thing, this is what we refer to as consolidation. So at this point, market is indecisive. You get it? It's neither moving in an uptrend, neither is it moving in a what in a downtrend, or like it's not moving any of the two ways. It's rather what moving in a consolidated form, like in sideways. You get it? Yeah. So at this point, as a trader, you just need to wait for a breakout. And after the breakout, you wait for a trend to form. You get it? So after the breakout, what do we realize? Market created a high, then it came to create a low over here. Then it later came to create a higher high, and it came down to create a what? A higher low. Then we had it go all the way up here to create a higher high. After creating that higher high, it started falling. You get it? Then it created what? A downtrend. And with this
Hello.
downtrend, we have hello. Did you say something?
I was not hearing your voice
Can you hear
again.
me
That's
now?
all. Yes, please.
Yeah, so after it created this high, it started reversing to create what? A downtrend. And with this downtrend, we can see the low, we can see the lower high. You get it? There's a lower low over here, there's a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. Then what? When market got back into this zone, what do we see? It's erupted up. You get it? So this is a simple strategy that me have been using for the past 2 years, and what it is very consistent as well. I've been using it consistently, and I've been getting a consistent result with it as well. So this is very simple. At 2 p.m., I just look out for what? Consolidation. You get it? So at 2 p.m., this is the consolidation that what I have been able to come by. You get it? So after the consolidation, like I just look out for two things: consolidation and a breakout. So it can be a consolidation and a breakout to the downside, but in this case, you are using a breakout to the upside. You get it? So at 2 p.m., I'm just anticipating price to what get back into this consolidation. Then what? I take my buy here, anticipating price to what go up. He gets it.
Yeah.
Exactly. So this is what I look at every day at 2 p.m. So now let's go on to our charts and start this one, the back testing to see what market did last week.
Something I'll be confusing me
All right, you can ask.
about the 4 hour time frame.
Okay.
So does it mean if, like, let's say I want to use the 4 hour time frame to mark my zones, and then I come down to the 15 minutes to place my trade. Like, how many days would that trade take?
That one, this question, I remember if I answered it before. So the thing is, it doesn't, like, the time frame doesn't matter. Like the time frame has nothing to do with how many days your trade will take for it to hit TP or something like that. So the thing is, it's the number of pips that you are looking out for. You get it? If I should take my trade on the 4 hour time frame, you get it? And I'm looking out for 20 pips. That same the number of, like, the amount of time that will take that 4 hour to reach 20 pips is the same, like, duration for all of the time frames. You get it? Just that the only difference here is the candlesticks. So this one candlestick that you are seeing, this black candlestick that you are seeing over here on the daily time frame, it means that this whole candlestick took it took 1 day for it to what form. You get it? It took 1 day for it to open and close. You get it? And if you come to 4 hour, it means that this whole black candle you are seeing over here, it took 4 hours for it to form. Hope you get it. So you can buy over here. You can buy at this point. What's the name? At this very point. If you buy at this very point, I'm sorry, you can sell at this very point. If you sell at this very point and you are looking out for, let me see, 20 pips out of the market, 20 pips is here somewhere. So we are already at 500. So let me say 50 pips. So that's going to, let me just make it. So let's say 800 pips. You get it? So it means that as that candle is falling, that's like the 800 pips on the 4 hour time frame. That same, so let's say you've taken your position over here. If you go to 1 hour, it's over here. You get it? If this is 2 hours rather. If you should go to 30 minutes, it's over here. You get it? So you see, how many candles are you seeing? One. After this candle, we have 1, 2, 3. So the thing is, how many 30 minutes make like 4 hours? We have two 30 minutes making 1 hour, right? So if we have two 30 minutes making 1 hour, how many 30 minutes will make a 4 hour? Hello?
Yeah, I'm coming. Let me do some math.
Mm.
Hello.
Yes.
This guy didn't come over again.
So I was saying that
Yeah.
this candle you are seeing over here, the black one you are seeing over here, yeah, this
Yeah.
one took 4 hours because you're on the 4 hour time frame. You get it?
Oh,
The fact that I seen
okay.
it on the 4 hour means that what it took 4 hours for you to close. And it does not mean that if you have taken a trade over here, it must be 4 hours before your trade will go and hit TP. It doesn't work that way. You get it? The TP, what actually determines your TP is the number of pips that you are looking at from the market. If I should place a buy order and I'm looking out for, let me say, um 200 pips from the market, I don't care how long like this 4 hour candle will take to close. One thing about this one candles is, so this candle you are seeing over here, it means that what it's moved all the way down here, you get it, and it later came back. So I took a sell. Imagine I took a sell over here. I took a sell at this point, you get it. It means that
Yeah.
if I took that sell and I was anticipating to close my trade at this point, you see what happened? Market came all the way down here and it came to hit my TP. You get it? After hitting my TP, it reversed and it came back. You get it? This means
Yeah.
that like market did not wait for that 4 hour candle to what finish forming before it came to hit my TP. It's how far, or let me see, yeah, how far the candle can go. I don't know if you get it. I don't know the simplest way to explain this thing for you. So let me say if you are running, yeah, like running is measured in what sometimes kilometers and meters, right? So let me say your goal is to run. What's the name? Your goal is to run like
Hello.
10 meters. You are,
Yeah.
and if on an average, so let me say yes, we've seen Usain Bolt, like it's this on Olympics. We are trying to bet on this one, Usain Bolt, you get it. So you bet that was Usain Bolt, like averagely, we know that um Usain Bolt is about to take like 100-meter race, you get it. So definitely he will be going all the way towards, like he will be doing like 100 meters, you get it. But then from our prediction, you are predicting that what he should be able to do, what's the name, 20 meters. You get it. And I also will say that what I'm betting on him to what do 50 meters. If he does the 20 meters, you still get your profit. You get it. Same way if he does the 30 meters, I still get my profit. You get it. But then what? He wanted to do 100 meters. So that's like the candle, the 4 hour candle. The 4 hour candle may say that what I'll take 4 hours towards close. But within that 4 hours, I can move 100 meters and later come back towards 20 meters. You get it? I can reverse back towards 20 meters. So if you had your TP at, let me say, 200 meters, meaning if the candle could not stretch all the way to 200 meters before reversing, or let me see, doing 200 meters and still dropping, then it means that what you are definitely going to end up in a loss. You get it? I don't know how I can
Oh,
explain this for you to understand.
okay. I get it. So meaning the trade has to be monitored as and when they want to leave and close it. Or
Exactly. So you don't really need a candle to tell you anything. So let me see. I've taken my buy over here. I've taken a buy over here. And I want like 60 pips out of the market. This is 60 pips. So let me put my SL at 40 pips. So if I'm looking out for what 60 pips, what did market do? When market got into my entry, it gave me that 60 pips and it went higher. You get it? But then I want only 60 pips out of the market. So whatever happens afterwards, that one is not part of my, like it's none of my business. You get it, right? So I don't really care. So this is like 15 minutes. And it doesn't mean that what I'm waiting for 15 minutes before what I will get my distance. I'll get my TP smashed. You get it?
I think I had this question when Ezra was within the session. Whether the
Exactly.
time will determine the number of minutes or hours before you profit to own.
Yeah. So that time thing, like the only time that you need the distance, what's the name? You need the time frames. Time frames are just for just finding key levels and stuff like that. So 8 30 minutes in 4 hours. So
What I'm it's like I'm still not getting an answer to my question. I'm asking if, let's say, if you place, okay, let's say, a scalper and a big trader. Hello.
yeah, I'm listening.
Yeah, if a scalper places a trade, it takes short time before, like, it takes short time for the trade to play out. As a trader, so that's why I'm asking if with a 4 hour time frame, doesn't mean if you play, like, if you mark your key levels on the 4 hour time frame and you place the trade on the 15-minute time frame, so it means on the 15 time frame, every candle, it takes 15 minutes for it to close.
Yeah, so if you say it that way, that one makes sense. So yes, on the 15-minute candle, on the 15-minute time frame, each and every candle you see over here takes 15 minutes for it to close. Do you get it? Same on the 5-minute time frame. It takes 5 minutes for it to close. And this is how it can move. So let me see 15 minutes. Like it is like, let me see, 12 p.m. You get it? So 12:1, we can have candle move all the way up here. We can see candle move all the way up here. Then at 12:5, it can come down. Then at 12, let me say 12:10, it can come all the way up to again. You get it? Before, so sometimes before, what's the name? 12:15, it had gone from this place all the way down here. Hope you understand. And that's when we see what markets leaving out this small wicks, like this tiny slim wicks. You get it? It means that what market was able to come all the way to this point, but it couldn't close as a bullish candle because what we had more sellers coming to drive what price down. You get it? So let me see at 2:15, if we are about to find a new candle form, you see that a new candle will come and form around this point. The new candle will come and fall around this point. You get it? And because we have more sellers in the market, we may see it what also fall like this. So let me say 12:15, right? So meaning the next 15 minutes will be 12:30. So at 12:16, we can see candle moving to this point. Then let me say 12:20 something, it will come all the way to this point. Then at 12:30, it can close like as a strong bearish candle like this. Hope you get it. So let me see if I placed my sell at this point. Let me see. I saw that candle as like market has closed. So I placed this one, my sell at this point. You get it? When the new candle forms like this, at 12:15, it can sometimes, if there's volatility, even at 12, this one, 12:5, it can come with speed. It can come and hit my TP. At this point, I've already taken, sorry. At this point, I've already taken my TPO. You get it? Then at, let me see, I said 12:5, right? At 12:6, 12:7, then you see that what price will start going back. It will start reversing because what there's buy pressure. There's buy pressure in the market. You get it? So it may close 12:30 at this time, like at this structure. You get it? It might close. So when we see something like that, it means that what price was able to come all the way to this point. You get it? It was able to come all the way to this point. So the wick we are seeing is sounds like a shadow, like a footprint. You get it? So from this, we were able to know that, oh, so it was at this point that price hit our TP and we took our profits. But then what, after hitting our TP, it's later on what reversed back to our entry. Then maybe after closing at this point, we had another candle form. Then what? That candle maybe came to became a bullish candle. You get it? So maybe we had that bullish candle moving all the way up to go and hit the SL, but at this point, we are already out of the what they trade. You get it? I don't know if you get a concept.
Yeah. It's clear.
Okay. Joshua, is your question answered?
Yeah, a little bit.
A little bit. So where didn't I touch on?
I don't know. It's
Or
like
maybe I'm not understanding you. Try to make your your question simple as like as it can be.
I don't know how to put
Okay,
the
you just
question
say it
very
roughly
well.
like that and let me see.
Okay, so like how many like so there's no specific time that if you place trade on the 15 minutes, there's no specific time that the trade used to like will used to play out.
Your trade will use to play out. There's no specific time. There's no specific time. What you need to know is the volatility. The volatility is what determines like how much time you'll be this one spending in the market. You get it? So I don't know. If there's a new scandal, so let me say at 1:30, or you are I don't know, tomorrow, next week do we have any? What are you doing? Today is February 16th.
Uh,
Okay, tomorrow there's no major news. Next week is actually boring. Uh-huh. Oh, the time is not yet out. Tentative. All right, but then this is what I'll give you, yeah? Tuesday at 9:30 a.m. Just look at what's the name? The GBP. Any GBP pair, it can be GBP JPY, GBP USD. Immediately at 9:30, after that news release, you will see volatility come in the market. You get it? And as at that point, if there's that much volatility, price can go this way. It can go from what? 0 to 100, or let me say 0 to 50 in a matter of seconds. You get it? So that one, time doesn't really matter. So let me say you are a scalper, you want like 20 pips out of the market. If that news should come and market should go like price should go in your way, you are going to get exactly that 20 pips with like within seconds. You get it. But then if there's no volatility and market is moving slow, even though you are a scalper, it may take like a couple of hours before price might even reach that your destiny. What's the name? That your 20 pips. So an example is that silver trade you guys took with Ryan. You get it. So silver, for instance, is very slow. You see, so since when did you start seeing the $10? Elvis?
Oh, I think just the next day, the morning,
The next day, right?
around 4 p.m. Yes.
Exactly. So let me see. Let me say 1 day after taking the trade, that's when what we saw price moving like 100 pips. You get it? This is because on silver there is no much what volatility. You get it? So it took like almost a day, like almost 2 days for us to what even see 100 pips. But Elvis, you are here. Mostly when we go live and we are trading good, how long does it take for us to even start seeing like $6 and stuff? Within a matter of minutes. You get it?
Yeah.
Because what? There's volatility in the markets. You get it? So that one, irrespective of who you are, like whether you're a scalper, a day trader, or a swinger, what really matters is what volatility. You get it? The only difference is maybe a swing trader will be looking for 500 pips, and me, I'm looking for what's the name? 20 pips. And that 20 pips, it can come anytime. If you are a swing trader and you see 20 pips and you know that you think that what the 20 pips is enough for you, you can also close. You get it? It is not strict like that. Like the way Elvis, we were supposed, like you saw the $10 and you had wanted to close. Maybe it was because he was swinging, and Ryan is a swinger. He $10 is nothing for him. He gets, I mean, 100 pips is nothing for him. He wants to cop, like, let me see, 500 pips. He gets it. So if he sees 100 pips, he's not moved. So that's why he told you guys what, hold on to get more pips. You get it. But me as a scalper, I'm not even looking at 100 pips. Mostly on the live trades, what I'm looking out for is what, just 60 pips out of the market. You get it. So meaning, if I was on that trade with you and I should have seen $6, I would have closed out. You get it. And me as a scalper, I wouldn't even wait for my trade to go and run in the next day. That's how I rather trade good, which is very quick. You get it.
Oh, okay.
Joshua, has your question be answered?
Yeah,
Is it fully answered now?
yeah.
All right, sure. So, Mike, you're welcome. This is like the first time I'm seeing you here.
Hello, yes, thank you very much. Yeah, this is my first time, but
Okay.
I've been very silent on the page, but I just saw the link to join, and yeah, even just a few sessions, I'm just enjoying some.
Okay, that's great. How long have you been trading?
In fact, I am a finance person by profession, but not into any trading. Yeah.
Oh, okay.
Yeah.
Okay. Since when did you join the bootcamp? Did you join us from day one?
I think they won, but I haven't been active on the page, like trying to follow
Wow.
up on. Yeah, so I think I've missed a lot, like a lot.
Yeah, but I have not really missed much because we
Uh-huh.
always have there's some of the recorded sessions on our YouTube. So I wouldn't say you've really
Okay,
missed like that. Yeah.
okay,
And Cedric keeps on this one sending the playlist. So I think you can get a link from the
okay,
group that you
okay,
go and follow up from there. You get it.
okay.
But then
Sure.
it's good you've joined today's session. So we've already talked about you've not touched trading before, right? Okay.
No, not on this. Just that, yeah, being in a finance person, do understand some terms, and I know I saw you showing the forest factory. We use that even in our report writing to our clients, like try to follow up how international developments like BOE, Feds, other decisions, and will likely
Oh,
impact the
okay.
market for the firm. So we do read wide and follow forest factory, like to check major development with a red this one to tell add it to our storylines and all of that, but not being actively trading here on the
Oh, okay. That's great. At least you have a capital markets practitioner over here. But that was too unfortunate because that was last week. We had Emmanuel. He's a fund manager at Sentinel Securities.
Yeah, I think I know I know him, but not
You know him?
again, not on one-on-one, but
Oh,
I
okay.
know. I think we interact in some emails and all of that. But yeah, oh, then I miss a lot.
Yeah.
Anyway.
So he came to give what's the name, the institutional, he came to give them the institutional perspective. You get
Okay.
it. You know, there's a different way retail traders look at the markets,
Yeah.
but institutions to look
Yeah.
at
I
it.
think,
You get it.
yeah.
Yeah. So he came to draw that common ground for our participants.
Okay. And that's nice.
Yeah.
And you said all these recordings are on your
Yeah,
YouTube
all of them are
platform.
available on our YouTube. Yeah.
Okay, sure. I think I had to start to consuming them one by one. Yeah.
Okay, that's great. Yeah. So today actually we are doing back testing. We are just back
Okay.
testing what happened last week, and we may try to forecast what might happen in the following days to come. So for last week was actually good for the community because from Monday to Friday, now from Monday to Thursday, we backed like wins throughout. Then we had this on Friday coming to spoil the whole vibe. We took a loss on Friday, but then yeah, the RR was good because on an average, that's like 4 out of 5. And let me say on an averagely, we're taking 60 pips. So let me see the 60 pips by 4, that would be 240, right? Yeah, so 240 minus the $10 loss, the 10 pips loss that we took. So I think that's there are out there. So, guys, so this is what I was saying. Exactly at 2 p.m., my rule is very simple. So, exactly at 2 p.m., I'm just looking out for this thing. So, Elvis, you are here. You've joined most of the live trading sessions that we had. So, I think you've seen like firsthand we taking all of these setups that I've shown over here. So,
Please, so with the live trading, sir,
yeah,
set the setup, like do input the stop loss and everything on the, like do input the
I'm sorry, I missed you.
stop loss, the TP for you to hit and start, or how do you do it?
Please, your question again. Hello.
Hello,
Yeah, your question again.
I was asking with the live trading, do
Mhm.
you when you set the positions, do you put them in the MT5 and place them before the market hit the
As a pending order.
ha?
No, I don't do pending orders.
Because when I tried to follow on Friday, I think that's when
Friday wasn't
I
live.
mean Friday.
Yeah, Friday we
Friday.
didn't have a live session. I just sent my prediction in the group.
Oh, okay.
Yeah. You
How
see, I
about
was
doing live?
like I was like I've taken a buy position. So in case you want to enter, just set this one 20 pips away from your entry.
Oh, okay.
Yeah. So the actual live sessions were Thursday, then which day again? I think we've been having. So Thursday was like that moment where we had Kabna closing his trade very early.
Because I was wondering how you were able to enter the trade fast like that.
Oh, I'm a scalper.
Mhm.
Sometimes you just need to enter then close very fast.
I had to go and input the figures at the respective places one by one, right? So it was delaying.
Me, I just do market execution.
Oh,
So you
okay.
see at 2 p.m. this simple graph that I've this one drawn over here. So this is a consolidation area. You get it. So in our previous classes, we've been able to establish that what market moves in 3 dimensions. You get it. It's either moving sideways, uptrend, or a downtrend. You get it. So if it's moving sideways like this, there's the worst time as a trader to be trading because as at this point, market is indecisive. You don't know whether it's going up or down. It's just moving within a range. You get it. So you rather wait for what a breakout from this very consolidation. So after it's moving up, down, up, down, up, down, you have a very strong impulsive movement which will come and break this consolidation. You see, so after it breaking the consolidation, then it will start creating a trend. And a key characteristic of this one, of an uptrend is market creates a high, it comes to create a low, then it comes to create a higher high, and it later comes down to create a higher low, then it comes up a higher high. So at this point, you saw that what price has started declining, like it has started falling. You get it? And this is a very clean characteristic of what a downtrend. A downtrend creates a low, a lower high, a lower low, a lower high, a lower low, a lower high. You get it? And my strategy is very simple. after a breakout, like after a consolidation and market has broken out. So this one we saw price breaking out to the upside, right? In the same way, we can have price breaking down to the downside. Hope you get it. But in
Yes.
this case, we are just using price breaking out to the upside. So we had this consolidation from this point one, two, three, four, five, all of these consolidation. We had price from this point coming to break the consolidation. You get it? So this is the area that I'm interested in at 2 p.m. You get it? At 2 p.m. GMT. This is the zone that I'm looking out for. You get it? So when price should what? Just break out, then it forms its higher, like its uptrend. But before I even believe, or let me say have confidence in a setup like this, I must make sure that what the overall trend for the day is an uptrend. Hope you get it. Because sometimes it's just like life. Sometimes you make it to a very like a very let me see some level, then you have to what take a setback. You get it. Then later on like gather momentum and come back stronger. You get it. And there's a simple analogy in this one trading as well. After the breakout, form your uptrend, then later on fall back into these zones. So you see that I've marked out this zone. You get it. So exactly at 2 p.m., I want to see some candlestick for there's some confirmation at this very zone, which will give me confidence that what market might probably what continue moving up. You get it? So as at this point, maybe it's 2 p.m. I'll just put my buy position at this point. I risk, let me see, my daily 1:3, right? Then we target this one. You get it? So we'll just be in this trade for a couple of minutes. Then we know how fast gold is by whatever minutes it will take us. Price would have hit our 60 pips targets already. Then we just was close. You get it? So for the past week, like from Monday to Thursday on our life, this is what we've been doing throughout. You get it? We just look out for a consolidation zone, anticipate price to get into that consolidation zone, give off this one a confirmation that it might continue going up. Then we take our buy position at that point and what anticipate price to what move up. And sometimes it goes our way. Like 4 days consecutively, it has gone our way. Friday too, it went our way. Just that what it went to hit my SL before it went my way. Although I lost on that trade, Kwabna took that same trade and he made 30 pips, like $3 out of it. You get it? Yeah. Just that my entry was very bad. That's why I was kicked out earlier. So that's how it is, right? Uh-huh. So since we've been able to establish that this is what we are looking at from the market, then it's simple. Let's go to the markets. Let's go on the real charts for, let me see, last week and see what price actually did. Let me take a screenshot. Right, so I'm coming. Let me send this thing to the group. So I'll be sending this thing to the group for you guys to come. Let me see. Later attend to it. Oh, no sense. Yes, I'm coming. Yeah, so I just sent it to the group. Right. So let's continue with what we're doing. So since we've been able to establish this, let's go into the charts and see what happened last week. So we are going to this is the daily candle. So we are going to start from Monday. So this Friday, Thursday, it's even here. This Monday. All right. So let me mark it. Okay. Let's go on the 4 hour. So guys, 2 p.m. Cool. 5 minutes. Yes. Let me delete all of these things that I've marked. 13 drawings. So we are Thursday now. Wednesday, Monday. So for you to know the days, you can be looking at the bottom. Hope can any of you see Tuesday 11th February 2025 6:10 at the
Yes.
down?
Yes, yeah.
You can see.
Yeah.
All right. So we are going all the way to Monday, and Monday in particular, we are looking out for 14 o'clock. That's 2 o'clock. All right. So let's see what price did at 2 o'clock. All right. So at 2 p.m., this is what we have. And there's this thing that you guys need to learn. When it comes to trading, sometimes you just, not sometimes, always, if you find a strategy or if you should come up with a system, make sure that what you are sticking to that very system, okay? If you don't see anything happening, there's no need for you to what? Take a trade. You get it? If you don't see your setup like showing some signs that what this is what I'm looking out for. So in this case, we are looking out for a consolidation, breakout, price should come into it, then what go up. If you should come Monday and you're not seeing anything like that, don't try to force trade. Just close your MT5 and go. The next day, if you come, you will definitely see something like that. You get it. That one will help you not to take like unnecessary losses. Hope you understand. All right, so let's take Monday. So Monday, where is the consolidation we are seeing? Yes, a consolidation at this point. I don't know if you guys can see it. Can we all agree that it's a consolidation? This very point, we had price moving in sideways, up. So where is it? This is the consolidation. Started from here, up, down, up, down. Then at this point, it came to break it. Then it continued what? It created a high, a low, sounds like an equal high, an equal low. There's something like a higher high, a higher low, a higher high. Then it came back. You get it? So this is 225. So that's what I was talking about. So since we've been able to, but before I proceed, I want you guys to understand whether you understand. I want to know if you guys understand the sideways movie, the consolidation that I'm talking about. So can we all agree that there's a consolidation? This very area. Can we agree that this area is a consolidation? Hello?
Yes.
Yeah.
Exactly. So at this very point, we saw this consolidation. So this is our point of interest. So when we say a point of interest, that's a point that you are looking towards take this one, execute a trade at. You get it? So this very point you are seeing here, this is our point of interest. So we will just extend it So you should know that this is something which has already played out. So meaning last week Monday we were just anticipating for what price to get into this zone, then we take our buys. You get it? But we are not waiting to take it at any time. We are waiting to take it at what? 2 p.m. Guys, hope you get it at 2 p.m. So here is 2 p.m. So at 2 p.m. we saw that what price has printed this very strong bearish candle. You get it? So me at 2 p.m. I wasn't going to enter a buy, because entering a buy after seeing this very strong bearish candle, it's very deceiving. Yeah, it's very deceiving, and you wouldn't like to what enter a buy after seeing something like this. You just need to wait for another confirmation. So we had price moving this way. It came to give off a rejection after this bearish candle. Then after this one bullish candle, we had it what's like showing some potential that what buyers are now in the markets. You get it? So mostly it's very simple. After seeing this, after this price formation, we just set our position over here. Then we go for what? We risk our 20 pips for 60 pips. Sorry, for 60 pips. So it's always, yes. All right. So it's always what? 1:3. So you can see that what? Just following that simple rule, Monday, we were able to what? Back a win. Can you agree to that?
Yes.
Exactly. So that's what you are looking out for. That same simple strategy. Consolidation, breakout, go and play up to this point, then later come back into it and what? Let's buy. And that's what we're able to do to what? Get uh this 1:3 ratio. You get it? So that's it for Monday. Now let's go to Tuesday and see whether we saw a similar thing too. So we are already in Tuesday. So Tuesday too, we have a similar one, but this one is not that clean. There's not a clean consolidation. And I don't know, Tuesday I didn't trade. Even if I traded Tuesday, I wouldn't have. Oh, excuse me, guys, I'm coming. Yeah. Sorry, guys. So this point you can see a consolidation. You get it? But as I said, Tuesday, me, I didn't trade. If I traded, I wouldn't have taken this setup, right? Exactly. So let me see. So even if, so this one is just for tutorial sake here. So let's say there's the consolidation that we found at Tuesday. Let's wait for 2 p.m. about and see what price does at 2 p.m. So this is 3. Hey, where is 2 p.m.? So this is actually 2 p.m. All right. So I don't think there was any setup at 2 p.m. So at 2 p.m. there was no setup. The setup came at 3 p.m. rather, but I'm not looking at the market at 3 p.m., right? So I think Tuesday we had no trade, right? Yeah. And that's what I always say. You guys, if you're not seeing any setup, don't force any setup. Just close your MT5 and have a nice day. It's better to what? go with nothing than to go and take on an unnecessary loss. So now let's head on to Wednesday. So Wednesday too was a very clean one. Where is it? Yeah, this Wednesday. So I think Wednesday we had it forming on the 30 minutes and it came with a blessing. That was a fair value gap. At this point, I know that most of you know what a fair value gap is. Hope you know what a fair value gap is. Hello?
Yeah.
Obviously know what a fair value gap is.
Yes.
Great, great. Mhm. Exactly. So there's it, the 30 minutes. So you guys can see this clean consolidation. You guys can see this, right? This is a consolidation of the 30 minutes. So sometimes, yeah, you may not find that consolidation you're looking on the this on the 5 minutes. You get it? So me, I'm not like I cannot say that I strictly trade with the 5 minutes time frame. The 5 minute time frame, that's how I go there to refine my my setups in order to get like clean, what's the name? Like tight stop losses. Okay. If I'm to be taking my setups on the 4 hour, that will mean that I will need to be risking like 50 to 100 pips, bro. That one is too much for me. I only need 60 pips out of the market. So why should I be risking like 60 pips? I'm sorry, 50 to 100 pips. You get it? Yeah. So I'll go on the 5 minutes in order to get minimum, or let me see, maximum 20 pips. If I'm trading currencies, I can risk as low as 5 pips, then target like 20 pips. You get it? Yeah. But it all depends. RR. You guys need to keep that in mind. Risk to reward. Yeah. So this is the consolidation zone that we marked as RPOI prior to what Wednesdays 2 p.m. So this is price at 1:30. So you can see at this point here. So there's 1:30. Let's go 1:15. Exactly. So we've been able to mark out our consolidation on the 30 minutes. So exactly at 1:30, we saw that what price got into this zone, then what? It left off a rejection. And after that rejection, it printed a very strong bullish candle. You get it? And this bullish candle was formed exactly at 2 p.m. Hope you guys can see this. So it's printed a very strong bullish candle afterwards 2 p.m. So if you're a trader and you've seen what's the name, this very strong bullish candle, there's no need for you to what wait for extra touches or you wait for extra confirmations. You get it? Because these two candles are enough. A rejection, bullish, and followed by another bullish candle, which even formed at a very key area. You get it? So meaning that what price has that tendency to continue moving upside. So at this point, we just what enter this one our buy position. We risk our 1:3, then we wait for the trade to play out. Hope you get it. So that was it for Wednesday. Now let's head into Thursday. Let me go back to my 5 minutes. Oh, okay. So Thursday. So Thursday too, we had a very clean setup. But that one, I think I saw it on the 4 hour. Mhm. So there's a Wednesday setup. Okay. So let's look out for that zone. Thursday, right? Yeah. Yeah, so that's it. There's it over here. Thursday, there's our consolidation. So let me clean this setup. Let me clean this one so that you guys can see it. So this is the consolidation. It starts from this point. This one wasn't that clean. Yeah, so we mark this our point of interest. So this is the consolidation. Then it later broke out. It came to play. It came to play a bit. Got into the zone. Now I didn't get like just made some efforts to get into the zone, but I couldn't get into the zone. It came up a little bit. Then later on, we had it come straight into it again. So where's 2 p.m.? So exactly at 2 p.m. too, it gave off this rejection. You get it? So that's like multiple rejections in that zone. So that's where we need to put our entry at. So we enter at this point and we risk our 20 pips for 60 pips. $20 for 60 pips. All right. So because this 30 minutes, that's why we are finding this one's very small. But then this, let me see whether it looks quite big on there. Yeah, so let me clean it. So that's where we put our entry. So exactly at 2 p.m. it's printed off this very, oh, all right. So there's 2 p.m., right? Now there's one. This 2 p.m. So 2 p.m. it gave off this rejection. And after seeing this, we don't waste time. We enter, we risk our 20 pips. We risk that 20 pips. Then we target the 60 pips, right? 60 pips. Yeah. So 1:3. Then we out. Then that's what for Thursday. So this is the trade we took Thursday. Elvis, you remember, right? You remember this trade?
Yes. But
We
funny
had
enough, all this week I couldn't enter job.
God. You need to so the thing is because I'm a scalper, so mostly when you miss my entry, I'll advise that don't get into it. Maybe you go and enter late. Okay. But I just hope that from tomorrow looks like a holiday. Tomorrow is a US holiday. Let me check.
I think there's some holiday.
Come again.
I think there's a holiday. Yeah.
Yeah. Tomorrow looks like holiday. And if there's a US holiday, there's no need for you to trade. Market wouldn't close, but then there will be no volatility. And if there's no volatility, yeah, it's a holiday, bank holiday. Can you guys see it? Can you see? Elvis, that's very points.
Okay, the ash.
Yeah, the
Gray
ash
or
one. Yeah, so it's a holiday in the US and it's a holiday in Canada as well.
so meaning the market is not really going to be.
Yeah, it's not going to be volatile. If you go and trade it tomorrow, you end up in a very big spread. Spread is by this time, I know you guys know what spread is. The difference between the ask and the bidding price. And if the spread is that high, you will see, like you see markets.
Any dollar per or any dollar per BR will face such a
Yeah, so you can
such
trade GBP JPY, but you cannot trade GBP USD.
okay.
Or let me check. It might also be a holiday in there. So yeah. So UK is fine. There's no holiday for the UK tomorrow. So you can trade GBP JPY. Same way there's no holiday in Japan as well. So you can trade GBP JPY, but you cannot trade GBP USD. Get it?
Okay.
Yeah. So this trade, I remember this when I now get it. So this where we took our trade. We took it around this point. This one we entered early. We took it around this point. And this is somewhere Kwabna closed his trade around somewhere here. You remember, right? Then it
Yeah.
later came back to what hit RTP. Yes, I remember this very trade. So that's it. Then let's look out for the Friday trade. Friday really broke my heart. So, oh, Zoom. All right. So Friday, 2 p.m. Hey, I'm already down. Just the two of us. So let's go and look out for our consolidation. So it seems even Friday used our Thursday consolidation zone, that same zone. No, no, it didn't use that zone. No, I didn't use that zone. Let me go to the 4 hour to find it. Or let me say the 30 minutes. Yeah, it didn't use it. It's rather used this zone rather. So, so this zone is for Thursday. This is Tuesday zone, Friday zone. A very clean consolidation around this point. Hope you guys can see it. Very clean one here. Break it down. So this is the zone that's Tuesday, so 2 p.m. So there's it. Exactly. So this is the zone. Let me refine it and let's take this very one. Yes. Now let me go to the 5 minutes. So I think I made a very big mistake. I came to enter around this point after seeing this bullish candle. Oh wait, is this the 2 p.m. one? Okay, that's it. Coming. Yeah. Yeah, it says that one. Yeah, so the mistake I did was I came to I entered around this very point. This is where I entered the trade at, and I was risking only 20 pips. You get it? So market came to take me out at this very point, and what it later came back into profits. But then that wasn't really the thing. So since we are doing back testing now, there's a chat. Why do I always come to the 2 p.m.? Okay, so for this one, I go to what's the name? I came like I realized this thing through experience. You get it? So the thing is, markets have sessions. We have the London session, Asian session, like the three key sessions that me I've grouped them. That's London, Asian, and what's the name? The New York session. You get it? The New York session actually opens around 10 a.m. Yet it opens around 10 a.m. to 10 p.m. But one thing is the market really becomes like active around 2 p.m. or let me say around 1:30 because we have most news releases coming at 1:30, 1 p.m. there. So around that point, it's like that's when we have the what's the name? The New York traders, or let me say the US traders, becoming active. So that's when the big banks in the US have opened their trade positions. You get it. So as at that point, like New York session has been very like it becomes very volatile in regards to gold and any other what's the name US pair. You get it. So exactly around 1:30, 2 p.m. That's when we will see the London traders like packing off. You get it. Around that point, they are also closing their trades. You see, let me say Ghana over here in Ghana, we have most banks closing around 4 p.m. So around before 4 p.m., you see most banks trying to, yeah, you will see most banks trying to, let me see, close their books, trying to start doing their this one. Like if let me say those banks were investment banks or like they were banks, they were banks with trading floors. Before 4 p.m., they should start what closing their trades, their positions. You get it. If it's a loss that they've incurred during that whole day, they need to start closing that loss and they need to start doing their accounting for like let me see their daily reports. You get it. So that's what happens on the market around 2 p.m. Because around 2 p.m. the landing traders have already started what closing their so if it was a buy position that they had on good, as at that point they've already was started closing their buy positions. You get it. And as they are closing, now that we have the New York traders, what's like putting more volatility in the market like by them opening their positions. You get it. So it could be that these landing traders were, let me say, speculating on the opposite side of what the New York traders were speculating. So let me say, if the landing traders were in a way going for a buy, probably we might see the New York session going the opposite way. You get it? But before it goes the opposite way, you must first see the fake out. So the fake out is what we mostly see. So this is a fake out. So you could see this bearish candle. You get it. So if you're a trader and you saw this bearish candle, you may think that what price is about what continuous selling. That's why even at 2 p.m. we just don't what enter a position because we've seen a candle. We wait for a confirmation around a key point. You get it. So it could be that at 2 p.m. the New York traders wanted to enter a buy, but they need to take retail traders out. They need to take liquidity. You get it. Without liquidity, they cannot move. You get it. They need to close some people in losses, like take money. You see that kind of thing. Or sometimes, and these guys, they buy at psychological zones. So this was something that um, Emmanuel came to touch on, the guy from Sentinel. He came to touch on. It was like the big institutions, they buy assets at one psychological zone. You will never see a bank buying this one, an asset at, let me see, let's say CDs for instance. You never see them buying CDs at let me say 15.61 or something like that. It's either 15.6, 15.7, or 15. You get it? You never see them what trying to add points to it. They always buy it at a round figure. You get it. So although the New York traders want to buy, like they want to buy the markets, they wouldn't start buying at this point. They rather wait for a very like a specific zone for price to get into. Immediately price gets into that zone, that's when what they start executing their buy positions. You get it. So mostly that's and this was something that I came to realize through experience. Maybe the analogy may be wrong, but then this was something that I was able to realize through observation, just consistently trading gold for 2 years. You get it. So I think you guys too, since you guys are new, I wouldn't restrict you guys to like I wouldn't limit you guys to only this. Try to explore and find your truth as well in a way you like. You see, what really moves the market is the fundamentals, and whatever trade position you are entering, it needs to be backed by a fundamental. You get it? A fundamental is not the news releases that you are seeing. Like sometimes you need to read wide. You just need to make sure that what's like you are current in what's happening in the financial markets. You get it? The tariffs that this one Trump came to this one pose on those countries, you should be able to do your research to know the probable effect that it might have on those respective countries and their currencies. You get it? Because it's their currencies that we are trading, and you also need to know whatever pair that you are trading. Make it a point to know what's really happening in their economy. You get it? Yeah. I do this, but then I don't use this ones because I'm a scalper. I don't really hold trade for long. But then the time that I've really used the fundamental to hold trade for long was last year. That was my BTC trade. I actually bought BTC when it was at 72,000 and I held that trade for BTC reached like 100,000. You get it? Yeah. So sometimes when you know that your fundamentals are good, bro, you don't have to think twice. Just buy and hold on to it. Then have a very reasonable target. And when it reaches that target, close it in that big profit and enjoy. Hope you get it. So that's the main reason why for me, I mostly wait at what for 2 p.m. You get it? Yeah. And at 2 p.m. too, I'm not just waiting for 2 p.m. like that. I'm waiting for price to get into a specific zone at 2 p.m. You see, like this one for instance. So let me see if it was any trader who was just looking out to buy or just do anything on the markets after seeing this very strong bearish candle, that very trader will be selling because he has seen like a sell signal. But then what? This is a very sell, like it's a wrong sell signal because we had what price selling all the way into a specific zone. And this is the zone that we have marked out as what's our point of interest. This is the zone that we are interested in. So we just want to see some signs of pullback or reversals. You get it? And we saw those signs. So these are the very signs that we needed to know. There was a rejection one, another rejection two, and a very strong bullish candle. So at this very point, bro, there's no need to think twice about this. Just put your position here, risk your 20 pips, risk your average 20 pips, then target your 60 pips. Okay, so 60 pips. Yeah, 60 pips. You get it. So, and there's one advantage of scalping. So you see, with scalping, you don't really need much from the markets. And see what price did exactly when it reached our 60 pips target. Immediately reached there, it's reversed. You get it. So that's where most swing traders like. So that same swing that you guys entered, I also entered. I mean Ryan's this one signal. I entered, but I closed out when price reached 60 pips. You get it. I closed out, and you know that for this one, so let me say a swinger may someone who may be swinging may think that what price will continue going up. So at these 60 pips, he may not close this one is trade. He will still be in that trade, anticipating that what price will still go up, and stuff like that. You get it. But then what exactly when it reached 60 pips, it started reversing hard. And bro, it really reversed down here. You get it. So, well, me, that's the major I like scalping. You see, I risk less. I aim something higher than my risk. You get it. I'm not this one targeting that much big pips, but then at least my target is bigger than how much I'm risking. You get it? Because 60 pips is way higher than what that 20 pips that I'm risking. And if I should hit my 60 pips this one target, I'll walk away with $30 if I'm to use 0.05 lot size. You get it? And if I should lose 10 pips, that's going to be $10. And that's what you guys saw Friday. I lost $10 because I hit my 20 pips. What SL? You see? So the whole of yesterday, this is what I made. Monday, Monday was 30 USD. Wednesday I didn't. I'm sorry, Tuesday I didn't trade. Wednesday 30 USD. Thursday 25. Then Friday I lost $10. So if you should do the math, you should know that what although I ended up with a loss on Friday, I still worked profitable. Like I walked away from that week very profitable. And that key thing that you guys need to pay attention to: risk management, consistency, and please your psychology, keep it in check. Okay. All right. So I think the back testing for last week is done. So you see, just following that simple that's one strategy: consolidation, breakouts, mark out that consolidation area and anticipate price to get into that consolidation, then buy from there. Or the opposite way: consolidation, breakout, wait for price to what gets into that consolidation, then you sell from that point. It moves like, it just depends on what market is doing. If it is buying, if it's an uptrend, then you should anticipate that what price will get into that consolidation, then you buy. If market has been selling, then you should wait for what price to get into that consolidation, then you sell. Hope you guys understand it.
Okay, please. Per what you are saying, it means that scalping in gold is faster than scalping in currency.
Yeah, gold is very fast. Gold is very volatile. See, gold is very volatile. Yeah. But
So it
see,
means it's not advisable to scalp in currencies.
we do have people scalping currencies. Like, the thing is, you just need to know your math. You get it? You just know your math. So me, if I'm to scalp GBP USD, I know that what GBP USD cannot move like 60 pips, or let me say, yeah, 60 pips in the time frame that we are able to scalp 60 pips on gold. You get it? So I'll be looking to just I'll just be targeting 20 pips on this one. What's the name? On gold. I'm sorry, on GBP USD. And you know how much I'll be risking? I'll be risking only 5 pips. You see, so these are the maths that I use. I'm scalping Odo, and if I'm risking 5 pips, it means that what I can increase my lot size. Hope you get it.
Okay.
So let's do the math here. If I'm using 0.05 and I'm risking 20 pips, if I should hit my 20 pips loss, I'll walk away, like this one, I will take a minus $10 loss, right? But if I'm using 0.05 and I'm using a lot size of, I'm using a lot size of 0.05 and my SL is 10 pips, I will walk away with what, minus $5 loss, right? And if I'm using this same 0.05 lot size, if I'm using this same 0.05 lot size and what, my SL is 5 pips, I walk away with what was in a minus 2.5 loss. You get it? So in this case, since I know that what my lot size really determines how much I'll be losing, then on that currency, if I'm risking, what's the name? If I'm risking like 5 pips, then I might use a lot size of one. I might be using a one standard lot, or maybe a 0.1 lot size. You get it?
Okay.
Yeah. So at that point, if price should get to that 20 pips, it's big money. If it should hit my SL, it's still the same as how much I'll be what. Like, the only difference is the lot size. Just know the math around the lot size calculations, then you'll be able to set targets, stuff like that very easily. Okay.
Okay.
Yeah. But
So
then
we
you
like
guys with
when
a small with a small account size, you guys shouldn't be trading good like that. So okay.
uh,
And even if
because
you are going to trade gold, make sure that you have set your SL in advance. Otherwise, like gold, see, you may anticipate like a 20 pips SL, like maybe your SL is 20 pips, right? But then gold can do like 40 pips in split seconds. You get it? So if, let me see, your account size is $10, you are using 0.01. Within some few seconds, you've seen your trade go minus $4. Like, you'll be shocked. But here's the point: you already wanted to what, lose only $2. Hope you get it.
no, okay.
So that's why I don't advise gold. Like, gold should be something, if you have a big account size, you should start trading gold when you are able to, let me say, afford like $100 account or $50. If I don't advise anyone to be trading $50 account with gold.
Okay.
Yeah.
So how long does it take for you to set the trend before you try to draw setups?
That
Can we
one it
just
depends. So
okay? So let's say maybe tomorrow morning I log into Trading View. I go to GBP JPY.
you just
So
need to
can
know
I
what you
get
are trading and be trading it in their session. If you are not trading it in their session, you will be in a trade for a very long time. There will be no volatility.
I'm sure GP? I think 7 a.m. going GBP.
Yeah, from 7 a.m.
JPY.
That's when you should be looking at GBP pairs.
Okay.
In fact, from 6:30, 6 a.m. then that's when you should be looking at it, especially for GBP JPY. You should be looking at it around from 4 a.m. because Asian session 2 is Japan. You get it? So it's better to trade it at that interlock, like between Asian and this one was in London. So even if you are trading GBP, you are trying to find setups around 5 a.m., 4 a.m. there. It's very good. By 7 a.m., you see a very strong volatility come into the markets, and you need to know what you are doing. If you don't know what you are doing, you'll be randomly be picking out some stuff thinking that you are trading. Then you'll be dying slowly. By the time you see, your account is gone. You see, so you guys need to know what you are doing. Okay.
Okay.
Yeah. So I'm taking questions, guys. Actually, I will not do market outlook because Monday I trade only good. I barely trade those currencies. You get it? So let me see. Uh, maybe Monday we can do a proper market outlook. Okay. Monday I'm not trading because it's a bank holiday. So let's say Monday. Okay. So today we wouldn't be able to do the market outlook. Me, for instance, I don't do market outlook like that. But then looking at market from the daily candle, hmm, it looks like a very sweet. It looks like a reversal because here's a very key point. Price got into it. It left off a rejection. It came all the way down here. It left off a rejection as if it wanted to continue the uptrend, and it got to that same zone again. And when it got to that same zone too, it left off a rejection and closed with a very strong bearish candle. So for next week, we should be look, and there's like a key zone. We can see some consolidation over here. So this place actually looks like a key zone. But me, if I'm to be trading on the daily time frame, for instance, this will be my POI, the consolidation over here. You get it. But after seeing a strong bearish candle on the daily candle like this, I want to see another bearishness to the downside. Market should continue falling. But then we cannot predict the markets. We just need to do what it is. So we are not predicting the market. We are not doing any market outlook today. Just back tested to see what happened last week. Okay. So guys, yeah, I'm taking questions.
Hello.
Yeah, Joshua.
So do you mark out your zones at that 2 p.m. or before the 2 p.m.?
By 1:30, 1 p.m., 1 p.m., 1:30, 1:40 there. Like before 2 p.m., that's when I start marking out my zones. So if you should go to the group, what time did I even send? So you guys, let's go to the group. So the group, that's Friday, right? Yeah. So 1:53. That's when I sent in the group that what price is rejecting smoothly. Let's see how it closes. You get it. And it was rejecting at our point of interest. You get it? So it's around one day. That's when I start marking my point of interest. So yes, it was at 148. I don't know. Can you guys go into the group and see? Like try to see what I'm saying.
Yeah.
Yes, yeah, I'm
The
there.
price is back
So
on. Yeah.
Friday 148. Have you seen it?
Yeah.
Yes, when I sent it, I was like, what? Price is back in the consolidation zone.
So,
You get it? So that's when I mark out. So the thing is, I don't like this pre-analysis, people trying to predict the market doing those pre-analysis. I don't do any of those stuff. You get it? It's just a matter of finding that zone. Me, if I find that zone, that's what I wait for. I wait for price to get into it. And I'm the only time I become concerned about it is if it gets into 2 p.m. That's the only time I get concerned about those zones that are what I mark out. You get it? So let me see. At 148, we saw that what price was heading its way into what that zone. And I came to what post in the group that what price is back in the consolidation zone. Then what at 153, I was like, price is rejecting smoothly. Let's see how it closes. You get, because 2 p.m. you have a new 4-hour candle forming. You get it. So when it closes with this one with a rejection, then we can go in for our buys. And immediately when it closed, 1, 2, 13. Yeah, so 212, I came to post in the group that I've already taken a loss. You get it. So I took my loss at 212. I think it was around 210 or something like that, like some 10 minutes straight like that. Yeah, but then 213, we saw that what price has come back into what profits and it was running smoothly. You guys, so that should tell you that what I entered my trade around 22, 21 or 23. You get it. So those zones, I only become concerned about those zones if it is around 2 p.m. 1 something. That's when I become concerned about those zones. But everyone and how they trade. Please, have I answered your question?
yeah.
Thank you.
Well,
Any other question?
next week, what are we looking at?
Is there next week? What are you looking at?
Yeah. So
Ask me.
next week is the last week.
Actually, today was the last. This week was the last week was the last week.
Ah,
Next week is it's just brushing. Let me see what we have for next week.
hey.
Next week we are just doing some. Let me try and open the listing. There are 2 of us. So week 4, right? Yeah. So professional branding and track records. Day 2, networking and mentorship. Then day 3. Yeah. So next week you guys are not going to do any class. It's just we will just brush up on the professional branding and track record. So yeah, then day 2 you guys will be doing some networking and mentorship. Yes, so I think the networking you guys have already even started. I'm sure most of you have been able to get in contact with the resource people that we introduced to you from week 1. And day 3 is a final capstone day. Day 4, you guys graduate. But it doesn't end from there. It's a community that we've created. So if you have any question, you can reach out in the community. And this back testing and things, I wouldn't stop. I'll just continue doing it. You get it? So every Sunday, you guys should be expecting a back testing. Okay. And the live trading as well. If I really have time, I'll go live for us to trade. It doesn't end after the boot camp. Okay. Yeah.
So we'll meet Ezra.
Time again.
We'll meet Ezra during next week.
No. Ezra's week ended last week. I mean week 3.
I DM'd you for his contacts.
Come again. He's in the group. Oh.
Yeah.
He's been texting. He's been texting.
Okay.
He's been texting in the group. Yeah. Or you can just ask what's the name? Cedric or whatever, this one. Yeah, he's in the group. That's right, he's in the group.
Which
Just reach out to him from there.
what's name?
I've saved his number, so I don't know how his name is over there. But his picture is on his DP. He has his picture as his DP, so it shouldn't be a worry.
Mm,
Yeah.
I've seen Don Exo
Yeah, Don
FX,
Ezio, that's him.
there's no profile picture.
Yeah, he's Don Ezio. All right, guys. So if there's no question, we can end the meeting, right? Hello, I'm still taking questions. Let me stop the live stream.